This man had set out to sink Reliance, but then Dhirubhai Ambani turned the game around in such a way that it became an unforgettable chapter in history. It was afternoon, but the atmosphere on Dalal Street had started to feel like a battlefield. The voices in the trading ring were loud. There was unease on every face, and only one name seemed to be floating in the air: Reliance. It felt as if some invisible force had entered the field fully prepared to bring this company to its knees. There was panic in the market, the shares were slipping lower, and many people had already accepted that this stock would not survive without breaking apart. But the real story begins exactly where most people step back in fear. Because that day, what stood on the line was not just one stock. What stood there was a businessman's mind, his credibility, and his stubborn belief that if someone came to defeat him in the market, he would overturn that person's game on the very same board of rules. This was the clash that did not merely shake the Indian stock market. It wrote a permanent story into its memory. This story had two faces. On one side was Manu Manek, counted among the most feared names of the bear cartel, and on the other side was Dhirubhai Ambani. The widely reported version of this episode says that in 1982, Reliance came under a bear attack. The BSE had to shut down in between, and Ambani turned that very crisis into his strength. Today, in the world of markets, we use bulls and bears like ordinary words. But in the early 1980, when a regulator like SEBI had not yet come into existence, bears did not simply mean pessimistic traders. At that time, the influence of some operators ran so deep that they could change the very air around a stock. SEBI was established in 1988. Before that, the market structure had loose settlement systems, limited transparency, and cartel-style operations could be far more effective. It was in that era that the name of Manu Manek rose, and in market folklore he came to be known as the Black Cobra. According to Livman's 2025 report, he was among the most talked about names in the bear cartel and was infamous for putting pressure on stocks through short selling. Although many parts of his life swing between legend and retelling, it is broadly accepted that he was counted among the most feared operators of that era. Manu Manek's persona was almost like a psychological weapon for the market. People kept saying that he liked to attack those companies where panic could be created. Short selling was the center of his weaponry. In simple language, he would sell shares first and later hope to buy them cheaply and deliver them. If the stock price fell because of his large-scale selling pressure, he would make a huge profit. In today's highly monitored market, this may sound easy to hear, but the market structure of that time was very different. The settlement period used to be longer, carry-forward systems existed, and bears had more chances to create price pressure. That is why a bear cartel was not just a group of traders. It could also become a manipulator of market sentiment. That is why many people used to get nervous just hearing Manu Manek's name. Then came 1982, and the famous clash of that year established Dhirubhai Ambani not only as a businessman, but as a market strategist too. According to Economic Times' detailed recount from 2011, in March 1st, 982, a cartel of Kolkata-based bear operators began heavy short selling in Reliance shares. Citing McDonald's book, E.T. wrote that the selling pressure was so intense that the stock fell from around 131 to 121. This was not just a price correction, it was an attack on confidence. And the timing was extremely sensitive too, because Reliance at that time was standing on trust for its capital-raising plans and market image. If the stock price had collapsed, the signal would have been clear, that the company was weak and investor confidence could break. The widely circulated version of this episode also says that the bear cartel shorted around 10 to 11 lakh shares. The exact number appears to vary slightly across different retellings, but the broad narrative is the same, that the short position was very large. The thinking of the bear operators was simple: raise the selling pressure, bring the stock down, and then buy it back at a lower price to close the trade. But perhaps they underestimated one thing. Dhirubhai Ambani was not going to respond like an ordinary promoter. He understood market psychology, knew how to build networks, and above all, he knew that if this attack succeeded, the damage would not be limited to that one settlement. Reliance's public credibility would also be hurt. That is why he answered in the same language in which the attack had come. Market action. This is where the story of the Friends of Reliance begins, which even today remains a part of Indian market folklore. According to the retelling by Economic Times and Zerodha Varsity, some big buyers suddenly began picking up Reliance shares in the market. The more the bear cartel sold, the more it kept getting absorbed. The sellers expected demand to break, but instead demand absorbed the pressure. Friends of Reliance was not any officially listed entity. Rather, in the market, this phrase was used for the group that was buying in support of Reliance. The widely accepted interpretation is that this buying was orchestrated by Dhirubhai Ambani's network and supporters. This began to disturb the bears' calculation, because they had sold the shares, but arranging stock for delivery at settlement time was no longer going to be easy. Here it is important to understand that the settlement system at that time was not like today's T+1 or T+2. According to ET's report, that era had a fortnightly settlement cycle, which meant positions could be carried for some time and delivery pressure did not come immediately. The bears used to take advantage of this very structure. But this time, as the settlement date drew closer, the picture began to change. because the buyers did not stop at just buying. They started asking for delivery. Now, the biggest problem before the bear cartel was that the shares they had shorted were not actually in their possession. If they were forced to buy from the market at a higher price, the whole trade would turn against them. In market language, this was a short squeeze, and this became Dhirubhai's biggest tactical victory. The most dramatic part of this confrontation appears around badla and unbadla charges. In the old Indian stock market, the badla system worked like a carry-forward mechanism. When the buyers insisted on delivery and the bears could not provide it, the pressure of extra charges began rising on them. Many retellings say that the buyers demanded a very high unbadla, trapping the bears badly. Wikipedia's summary version, which broadly matches widely reported accounts, says that to resolve the matter, the BSE had to shut down for 3 business days and the exchange authorities had to step in. Even if there is some difference across sources in numbers and details, the core fact remains the same, that the crisis became so big that the Bombay Stock Exchange had to take extraordinary steps. This was the turn that raised Dhirubhai Ambani to a new stature inside the stock market. The bears needed shares, and the price of Reliance in the market began to rise. According to the widely circulated version, the stock ran up sharply and the bears had to buy shares at very expensive prices. Market lore also says that in the end, the Ambani camp made shares available at higher levels and later rebalanced positions at a lower effective cost, completely ruining the bears' game. Public documentation on some elements of this part remains limited, so it is better understood not as settled history, but as the widely retold market version. But one thing is clear, this episode strengthened both Reliance's investor-friendly image and Dhirubhai's strategic reputation. This story became so big also because it was not just an attempt to save one stock, but a battle over public market credibility. Dhirubhai Ambani was among those early Indian promoters who helped take equity culture to mass investors, the scholarly work from outsider to insider. The case of Reliance also shows that Reliance created a different path for itself through public shareholding and capital market participation. So answering the bear attack was not only price defense, it was also about sending a message to its investor base that the promoter was not weak and the company would not bend before market pressure. That is why this 1982 conflict was not just an event in corporate finance, but also a battle of public perception. It is also worth noting that much of what sounds like legend in this story today was the product of the loosely regulated market structure of that time. Before SEBI was formed, information asymmetry, settlement lags, and operator-driven moves were far more effective in the stock market. Both bears and bulls could shake prices many times through concerted action. This was the background in which operators like Manu Manek emerged, and it was this very background that pushed a promoter like Dhirubhai Ambani to adopt an unconventional route of market defense. If we find this story thrilling today, the reason is not just the personalities. The reason is also that era when the market had not yet fully developed into institutional discipline. Manu Manek's story does not end here. Market narratives also say that later he came into conflict with the bullish wave of the 𝐼𝐨𝐥𝐸𝐵 Mehta era. In 1992, 𝐼𝐨𝐥𝐸𝐵 was doing aggressive buying in some stocks, and it proved expensive for bears to stand against him. Many parts of the Manu Manek 𝐼𝐨𝐥𝐸𝐵 Mehta clash are based on folklore, memoir-style recollections, and secondary retellings, so they should be understood not as absolute fact, but as market memory. LiveMint's 2025 report also broadly says that with regulatory tightening, a changing market structure, and the rise of new power centers, the era of operators like Manu Manek gradually came to an end. Now look at the second phase of this story. Dhirubhai Ambani's. Reliance started with textiles in 1966 and later expanded into petrochemicals, refining, and then over the following decades into telecom, retail, media, and financial services. This expansion did not happen overnight. Behind it was a long strategy of capital raising, public participation, and scale building. That is why the 1982 episode became not just a tactical win, but also a symbolic turning point in the Reliance story. It created the image that this company does not only sell products, it also knows how to control the market narrative. In the years that followed, that very narrative became one of the biggest intangible strengths of the Ambani brand. Today, Mukesh Ambani is carrying that legacy forward. According to Forbes' 2026 billionaire list, Mukesh Ambani's net worth is around $100 billion, and his Forbes profile presents him as the chairman of Reliance Industries, a diversified giant company with roughly $125 billion in revenue. His age is given as 68, and the business spans petrochemicals, oil and gas, telecom, retail, media, and financial services. This is the same corporate empire in whose early public market credibility, battles like the one in 1982 also played a role. In other words, the wealth figure that appears to us today like a headline has behind it decades of market trust, capital access, and layers of narrative power. What is the biggest lesson from this entire story? Perhaps it is this, that in the market not only balance sheets fight, nerve fights too. The bear's math may be correct, but if the player on the other side understands market structure, timing, and psychology better than you do, then even your perfect trade can turn into a trap. The 1982 Reliance Bear Cartel story is an example of exactly that. The Bear Cartel wanted to push the price down and make money out of panic. Dhirubhai turned that same panic into conviction, created buying support, and turned the settlement dynamics in his own favor. That is why this episode is remembered not just as financial history, but as a case study in tactical warfare. And perhaps that is why this story is still alive today, because it has everything: fear, conspiracy, ego, strategy, money, public drama, and a counterattack the market remembered for years. Even today, Manu Manek's name is taken as the Black Cobra, but in this story, the final strike did not come from that cobra. The final move was made by the man who understood that in the market, victory does not always belong to the stronger one. Many times it belongs to the player who keeps his mind cool even under pressure. That is why this conspiracy that had set out to sink Reliance became, in reverse, a part of that history where Dhirubhai Ambani was recorded not just as a businessman, but as a market warrior. If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible, but in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.